Hello from the children of planet Earth.
What's up, everybody? Good morning.
Hello from the children of planet Earth. Hello from the children of planet
What's up, y'all? Sorry, I had to sneeze. All right. With you. All right, nice, clean, rational day. Wait, this is not, let's get you up. Come on, over here. Everybody hit that like button really quick on the stream while you're waiting. Nasdaq good, S&P good, Russell good, below triple B on VIX, which is interesting going to earnings season to see VIX and decay like that. Pretty excited about that. Did he even bot us off? Hold on. Okay, my bad. How is that honor my voice? Okay, hold on. Alright, let's go ahead and just skip the intro. Alright, let's go. Alright, let's see what we got here. Good morning, everybody. Hit that like button. Let's go. Voice volume's a bit low. Hold on, let me double check that. Hold on. Oh. That's weird. All right, that should be better. Man, I'm two for two on fumbling at the open. There we go. Y'all should hear me now. My I don't know what happened. My voice my software locked up. There we go. What's up, everybody? All right, smash that like button while you're waiting here. All right, bear short up. Let's get the liquidity map up front and center. Oh, my phone just died. No. All right, SPY hedge break to the downside. Be very careful on that. Plus, we are BRSU. Should get monthly hedge pressure on the chart here. All right, so it's a little bit of a down day today. Interesting to see that we gapped up and broke the head pressure down. So remember, it usually stays in the area that it stays in. Like if you open above, it wants to stay above. So breaking hedge, be very careful. That's a pretty bad news sign. Limited upside today on SPY, obviously to 451 on top. So it's not long today for me. Okay. Okay, let's look at Q's same setup. Q's brick. Didn't break, but are also below, and this is just resistance 382. So a little bit of a down day today. Interestingly enough. Okay, let's do IWM. IWM, the good-looking one. What the heck is going on? Try that again. All right, BLU up. Doesn't look like there's anything in the way like gap fills or anything, so we're going to be just going straight up to DD bands for the target. It's really odd. You have no gap fills or anything nearby. Let me double check. What up, everybody? Okay, looking good. All right, so nothing here. That's been filled. Okay, it's not an update today, so pretty much a down day. Let's look at UVXY to check this. Pretty easy. So clearly my choice is either to do nothing or just sit out. Looks good. So we're on a bull side on UVXY, so just be careful. Bull side bottom is one of the irrational rules that you have. It can turn a yellow light. If you hit this, the market can spontaneously irrational as well. So down day today, and clearly right out the door with Rocket Scooter, we can see that, which is really lovely. All right. All right. What are you guys going to do today? Get some major stocks. Apple. We got hedge pressure bounce at 192, but in general, everything just looks like it's pulling back. Love how I can see that. Normally, I'd be looking for dips to buy. Today's a day to not buy anything. So I like that. Don't like the setup myself. Okay. This, all right. Quickie little trade plan here. And draw it up. Okay. Let's do all the pieces. Just kind of show you how it works. Okay. I'm just going to draw here. Tablet isn't turned on. Okay, so bear long up. Oops, let me open up liquidity maps. Everybody make sure you click this button. You have your liquidity map guide off to the side. Let's do load window layout. Like that. Okay, a little picture here. Make this a little bigger so that you can see all the parts of everything. This is a down day. Everything across the board is pretty much a down day. It's really nice. Okay. Here. BRSU is the most bearish. BRSD would be the most bearish if you want to rank them because all signs are down. Okay. Oops. Why did I not? Oh, yeah. Okay. There we go. So if you look today, Resilience is below 0. So this is all resistance, right? This is a short setup. Be very rare for this to do anything. There's nothing today, no catalyst, no events. All the earnings took place in the morning. Earnings is tomorrow. I think Netflix and Tesla, I think, are tomorrow. Some big ones tomorrow. And just keep in mind, being earnings season, there's going to be a lot of pre-market, post-market shuffling. You know, formulate your bias, figure out what it is you think is going on, trade appropriately. You know, day trading, I don't gamble through any of these things. I just use my normal bias. And then trade around them. Hold on, I gotta get back in the Twitter space. It's a nice short setup from here at 450 on S&P. With resilience less than 0, half gap is resistance. DD being bullish, you have one of those ones where a hedge pressure break can go here and end up back there. So there's some competing signals. So I don't short. I only short against the monthly hedge pressure personally. So it's a set out day. Uh, 452, 453. Yeah, that's a beautiful. Honestly, I wouldn't disagree. I wouldn't rank them, Jace, as far as like most. They're all bearish. They're like, the reason I say most is because just it has all three of them pointing down. It's really like bear, short, up. Okay, so your hedge pressures update once a day in the morning. All right, guys. Let's go to analyze this a little bit at a time. Any upside move, I'm still ignoring. It's not something I really care about. Okay. Yeah, I mean, the banks did look great this morning in earnings, and that's basically what's moving things up. Because there's a lot of divergence too, right? Russell's moving higher, Nasdaq's pulling lower. It's just a little bit of healthy rotation, to be honest. I wouldn't trust much today. Yeah, it seems to be all quick plays. I mean, it's, you know, again, once it shakes out, maybe we'll find some direction. But, yeah, I mean, tech does not look super healthy. It seems like a half and half, like the banks worked. SPX just worked there briefly, but everything else is, Tesla technically is working because it's phone support, but okay. Let's do some analysis here. Actually, let me show here. All right, so let me pull up the cheat sheets, everybody. See how this works. Again, like this upper move, I'm not really trusting a lot of it. So let's get the resilience up here. Okay, open this in the browser. Your cheat sheets, resilience, DD ratio bullish. Okay. 15.7, 15.6, 70, somewhere in there. But let's see if it holds here. There's my resilience one. Yeah, I like SPY to keep pushing a little bit here. Move your stops on a firm to low day. Okay. So this is going to be one of those DD ratio bullish ones. I talked about that this morning. Like I said, I don't short in these setups. I just sit out and miss it. This one applies open and bear zone, tap bull zone back to bear zone. So here at the max, if there is a short, I short here. If I wanted to end up there, I don't short on anything other than monthly hedge pressure, or if this is enough room to move. So you guys see how this works, right? Everyone type a big fat yes in chat if you see this. This is the DD. DD ratio is bullish, check. If you open in bear zone, you're more likely to close in the zone that opened it, right? So if I were to do anything, I just wait and then fade it back, right? So obviously this is not something okay, we have, you know, we're pushing through here. This isn't the one I'm going to jump in and say, ooh, let me take the long. I don't feel like I'm missing out on any of this. I'm going to patiently wait to see what I want to see. The R&R is pretty good on this one. Not only did we open right above hedge pressure and in a bear zone, you know, like I said, I'm aiming for it to return to there. Plus earnings season, right? Whatever healthy up, it's likely to fade. We're not going to rally really hard with major tech earnings tomorrow. We have some healthy sector rotating. Index divergence is showing you that people are rotating out of tech, leading up into tech earnings. People are getting into banking, leading into bank. You know, we had bank earnings today. Russell's moving a little bit faster than all of it to the upside. So if you keep a look at the way that it looks here. Okay, so we have the DD ratio. We're looking at that so far. Resilience. Let's see what resilience is doing. We have a positive and negative version of resilience. So let's go ahead and push it here. If resilience is negative, this is resistance, right? So through the box. If resilience is positive, that's resistance. So right here, it obviously, hold on, resilience greater than 0. A nice little squeeze actually outpaced resilience today. So this was something that was hard to catch. So now we're going to look at what resilience is doing as we interact with the interface right here at the border. So this is mode 1 resilience in the box. Mode 2 is outside of the box, right? So if resilience is greater than 0, as you see, you will support at the box. Let's look at this one, for instance. It's this one standing on your head. If you get here and res is negative, you fade through the box back to bottom, right? So let's go ahead and draw like a separation. So mode 2 is here, and mode 2 is like this. If res is less than 0, you fade through the box, right? So resilience being negative when we're up here, it's going to show the likelihood of the gap somehow at some point fading. See how at somehow some point it fades? there's nothing it fades off of. It's just ultimately the index will snap back into place. So it's kind of hard to aim an entry level for a short because it doesn't have a guideline for that, right? It just shows that the stocks are selling enough to yank this down. So it also supports this idea that as long as resilience is not that strong, then we can have this move to there and then move to there for S is less than 0 to fade, right? So this is keep an eye on this. Maybe it might fade, right? I don't take the short even though I know it's going to fade, but what it does is destroy my confidence on the long, right? So we're on the same page here. You guys can you're just learning how I would trade this. So clearly there's no strength in res to support a move to the upside. It opened above hedge pressure, according to here. If you guys want to, I'm going to retweet from the Matt account, but if you want to click the link there, we're live on YouTube every morning. You can see the charts that we look at on Rocket Scooter. I'm going to go ahead and I'm doing my analysis of the SPY right now live on stream, so you can all check it out. I'm talking about this nice little burp up that we've had and how the data doesn't look so good to support it. So I'm just drawing the case of how I use the Rocket Scooter tools to map out a trading day before I even make a trade. So I'll be detailing my trade on the stream. Just wait 5 seconds, and then you can take a look at the link I retweet, and then you can click it and watch on YouTube. Yeah, give me 2 seconds to do this retweet. Hold on a second. So when the liquidity map, right? What that actually is, it's 3 different letters or three different codes. MR is part of, it means mean reversion. So the first letter, it talks about how price is relative to what we call bull and bear zones. Bull and bear zones are where the market is divided into bull and bear risk. So bull positions and bear positions. The easiest way to see it is if you're in a bear zone, you know, obviously you're standing amongst bears that are outweighing the bulls. So mean reversion is, or a liquidity pocket as we call it, is when the market's not bullish and not bearish. You're kind of stuck in between the two. Bulls are out of the money, bears are out of the money. Everyone's losing to the house. So those kind of trading days don't have any momentum to the upside. They tend to be random and choppy. And exactly what you're asking about SPY, the liquidity map is telling us it's currently MR, or mean reverting, which means the market's just going to kind of chop around and likely do nothing to the upside. So even this little burp up today, I was just explaining that this is not something I'm going to chase in long. I don't trust this at all. I'm probably on point with that. And as I'm talking, there's some red candles coming out. Yeah. So the other 2 letters, and the liquidity map is a combination of all 3 of the letters. L means that the gamma is net long, or that the gamma hedging is net long, which is relationship to hedge pressure. If price is above hedge pressure, it'll be L. If price is below hedge pressure, it'll be S. So essentially what it shows is that the algorithmic side of the market that's balancing sold options is longing faster than they're shorting if that letter's an L. So mean reversion in long means it's middle, it's in bulls and bears, you're kind of sandwiched between them with a slight amount of long pressure from the long hedging. As you see, we're seeing a slight amount of long pressure as the market lift up a little bit. So liquidity map is like a treasure map. It shows you where you can walk to find hot spots to dig for treasure, right? Where your long and short pressures are. The third letter is a relationship between monthly and weekly options. Longer term risk, balance between shorter term risk. Up, just imagine an invisible upward pressure. Down is an invisible downward pressure. From the hedging, the time effect of hedging between short term and long term, we don't just look at the delta and gamma, we look at the time as well. So when it's up, it just means that you have faster short term hedging than longer term hedging, which always means the market is more bullish in the short term than not. So mean reversion long and up, as we see, MRLU is 3 letter codes that communicate all information very quickly. Kind of a choppy balanced day with 2 waves of, or 2 pressures pushing it up from the hedging. So when you look at it, you stare at the SPY chart today, it kind of moves up just a little bit, but it's not really running really high because it's not in a bull zone, right? It's not bullish, not bearish, just kind of sitting in the middle. And so liquidity map is designed to do that, to give you not only a mouthfeel of the market for your trading day, you know, obviously shows me where I can see entry levels to play off of, because I bet at one of these interfaces like hedge pressure that it's going to continue to go up or go down if we break it. And this is essentially how we use Rocket Scooter to make our trade plans every morning. So, long answer, but liquidity map is one of our most prized possessions. It's a fan favorite. On the platform itself, it gives you a guide and draws the arrows where the pressures push. Obviously, being an engineer background, love looking at diagrams. Always thought of the stock market having a lot of consistent behaviors, like the hedging and such is done the same every day. So ideally, I always remember that problem in physics where it's like, Tommy's pushing a box up a hill. The box weighs this much. There's this much resistance. There's wind blowing this way. How high up, how much force do you need to apply for the box to go up, right? And so like when you do all the little arrows and point them in direction, like the net sum of everything is just the general direction it goes. And we thought, if we looked at all the different ways hedging takes place, could we just simply draw arrows on a chart to show where that pressure is pushing? And sure enough, that's where liquidity map is born. So it's cool technology, and we invite everybody to come check it out, obviously. So go to the stream, I'll demonstrate a few of them. But yeah, SPY, clearly mean reversion. And obviously conversely, like QQQ is in a bear zone, right? So it's bear short with a little bit of upward pressure off of monthly. So NASDAQ opened up, started plunging in the bear zone. It started selling because of the short hedging. And then it hit monthly hedge pressure and bounced. That's the up. That's the upward part, because monthly hedge pressure is where the U comes from. So it falls from one, hits the other, and bounces off of it. It's pretty cool how the opening hour or two of the day is more scripted than not, because it's just everyone rebalancing quickly, and it's mostly algorithmic. Yeah, so great. You guys can always come. We'll give you tutorials on this at any point in time. So hope that answers your question. Do you ever trade RTY or NQ? I do if I find a setup that works. Like today, had I decided I wanted to do any trading today, I would have longed off of monthly hedge pressure on QQQ. Like that would have been an opportunity, because SPY has no actionable point right here. Bear short up, I would have. So I can find this. I would have taken a long up a hedge pressure, right? Monthly hedge. So when the opportunities are there, I'll take them. It's like clearly today was a bear short up on NASDAQ, if anybody's watching it. Yeah, fantastic trade. Yep. Let's see what we got on the liquidity maps. Look at the bull setups here. So losing steam on resilience today and this moving higher is great. To me, that's the perfect setup to wait for if I wanted to do anything on the S&P today. I agree too. I'm in the same boat. Today Nasdaq dropped exactly the monthly hedge pressure, hit that 380 and bounced like a champ. I'm showing it on the screen right now. This is your classic bear short up, hedge pressure to hedge pressure scalp. That 2-point drop in Nasdaq was just completely textbook. And that to some people was a long entry point to long up of the monthly hedging. So Nasdaq and some of the tech stocks are starting to get a little bit of steam here, which is again lifting the S&P. So you need to see how the pivots just take place and let you guys know the liquidity maps are printed at 9:30 in the morning. So this isn't like a technical indicator that updates on your chart in real time using price action. This is predictive. At the start of the day, we map out these levels and then you have the same map all day. They don't change. So obviously at 9:30, we're like, okay, 380 is the bounce on NASDAQ. And then an hour later or 30 minutes later, that's where that bounces. The idea with Rockets here was to create something where traders can get ahead and plan trades before they act. Not just sit there and stare at indicators all day. You guys got to work, you got families, you got life. But to know right when you wake up, okay, I'm going to play at 382 or play at 380. Let me set some alarms and I'll return to it when it gets there. To me, that's very powerful as a creator for tool sets for people. So what's up, traders? Outstanding setup, Joe C. Hell yeah. Nice job, you guys. Would you say the transition from bear short to mean reversion now bullish neutral, weak res though? Right, you're exactly right. Bullish, DD outranks all. Bullish, neutral. Remember, the middle is random with resilience being weak. It's exactly what we drew, a little bit ago. That's why I'm not chasing the long here. If I were to trade, I would have taken a long here. And again, I would exit my long right now if I were long because SPY is hitting a resistance. So you guys understand when you trade one, you got to look at all of them. So in the middle of a mean reversion, right? Liquidity pocket is the first resistance on SPY. So NASDAQ is going to stall. I would trim here and hold a runner to there. I would trim most everything here if I were long. Does that make sense? So when I'm trading the index, I watch the other indices and I watch where their pivots are. So I like to pivot. They're all going to kind of move together, right? So NASDAQ bouncing off of monthly hedge is the tech stocks moving, which is bringing the S&P up a little bit. Russell has a DD band right about here. It's very close to it. So everybody understand this, right? If I say that I was trading NASDAQ on the dip and NASDAQ looks like it's rallying and I want to hold it for whatever, the S&P just hit its liquidity pocket and the S&P might do that. So my NASDAQ trade is very short-lived. And so if I got this nice little bounce, I would close out most and lock in a lot of that profit because the S&P isn't running in a bull zone. We all understand? Just to say, like, you don't have to, this isn't advice or anything, but this is how I would trade, right? If I were long the NASDAQ, by proxy, the S&P is hitting its kind of resistance limit. Do I typically use market orders? I always use market orders. Like limit orders are a thing of the 90s. Unless you're trading options with a high spread and you want to make sure you get the fill, or you're trading penny stocks. When you're trading liquid stuff, you can afford to lose a tick to fire at the ask on these liquid futures than to fight all day to get exactly the fill you want. Speed is better than accuracy when day trading. Always. Now again, I don't long on a green candle. I always long on a red candle, so it doesn't even matter. Right? You can set a limit order wherever you want, but even if I throw a market order as it's ticking down, it's ticking down into my long. So I'm getting even a better fill as I throw to the market, and then it ticks down, and then I get filled at the end. So it really doesn't hurt you unless you're chasing a green candle and longing at the high. Then you're going to lose a bunch of ticks on market orders. Just don't be dumb like that. Buy on red, sell on green every time if you're using market orders. That's the rule of thumb when using market orders. It's pretty much a limit order, because imagine the tick difference between bid and ask is 1 penny. And I put a limit order right here. Well, I'm at the end of the line hoping that it gets filled. But if the price is It says if there's a red candle and I throw a market order, I skip the line and get filled at the same spot. Do we all understand that? Pretend there's 1 million people in line on the book here. And it's liquid, so that means it's just hanging tight. So you got 1 million people here. Do you understand that? Right? And I'm going to put a limit order at exactly this price. And I'm all these people got to get filled before me. And price is just bouncing between these two. Buy and sell, buy and sell, buy and sell. If it's a red candle and I throw a market order, I get filled either here or luckily maybe here if it sells through my bid. And sometimes I might get a better fill by a penny. What I am saying is it's a wash. There's no science to that. It's just a wash. If you systematically see red candles and you throw a long at a red candle, more often than not, you're going to get a fill over time equal to having a limit order there anyways. Sometimes you'll get filled a tick below. Sometimes you'll get filled a tick above. Overall, it's one tick difference to make sure you're in the trade you want. Like this little NASDAQ bounce, you'd rather get in here than it pivot a penny early and then it goes here, you know, 30, 40 cents higher. Then you go, shit, I didn't even get filled. All right, let me jump in here, and you lost 40 cents to save a penny. I always found that to be such a silly thing. And I know trading textbooks say, well, get the fill that you want with the limit order. That was before computerized trading, when people came up with rules like that. With liquid trading and there being just such available liquidity for you as a trader, unless what you're trading is illiquid, which means you have a huge bid-ask spread. Options can be that way. Or what you're trading is thin on the books, limit order will help you save 2 or 3 ticks. But you're already planning your trade to get so much run to risk anyways. You already have accounted for a little bit of inefficiency loss by making sure you get the fill that you want. Like the one thing that you're doing by juggling limit orders and moving them around is not saving you anything in the modern day. It's a math thing. And no, if anyone disagrees with that, just monitor your own performance over a couple weeks using market and using limit. You'll notice no observable difference behaving one way versus the other if it's like futures or something liquid. So when you're trading options, clearly you're going to want to use limit orders though. And it's a little bit harder to get an options trade. But then again, when you're trading options, especially like swing options, you don't want to chase and jump across the bid and ask to buy that. They're very huge, especially if you're, you know, versus in the money versus out of the money. Sometimes, you know, you'll see that the bid ask spread changes drastically. And so you're going to want to use that, but you're also structuring a long-term trade. You have the ability to wait for that. But day trading is all about speed. Get in first, get out first, and speed is how you get your win. Yeah. Is there a DD for Russell and IWM? Or sorry, for Russell? There's not, and there won't be one for a while. We don't intend on making one. We should make one, but we need to get thousands of Russell liquidity maps first. And that's a huge project to upgrade our data provider stuff already. It's hard enough to get that many. We have a whole army of computers crunching numbers all morning to get these liquidity maps in the first minute. It's a very complicated system. It's very state of the art, and it's very difficult because it requires just mountains of data. So as you see, sometimes our data providers crash. Imagine us adding thousands more stocks to that list to also crunch in the minute. Economically unfeasible. So we decided against making one. Obviously, we'd have to like triple our computational power and upgrade everything to get like additionally calculating things. So the idea is we originally, let me start over. DD, I'm completely taking a side conversation here. DD on Russell. Yeah, that's something we can do quickly. I thought you said monthly hedge pressure on Russell. Then I was like, oh, I mean, resilience. DD, yeah, we can make a DD on Russell. Forget everything I said. We can't make a resilience easily because calculating that many monthly hedge pressures very quickly is not the easiest thing to do. Hold on one second. Can you repeat that? Oh, I'm sorry. Yeah, we'll have a DD pretty soon. Agree. Just like placing limit orders, stops, and take profits just in case, God forbid, you lose the internet or something. Yeah, like a market order also is like, I never want to lose control of my trade. I always want to be able to control my trade. I want to be in control at all times. Plus, the limit order shows not like your one contract means anything. You're also revealing your hand to the market. Market order lets you get in without anybody knowing you were wanting to get in. You Mark Russell resilience while really getting credit. Thanks, Mark. I love it. So when I was saying earlier, DD we can make pretty quickly for Russell. It is on the works, but Russell resilience would require like a whole army of computers. So eventually we will, just not out the door. We didn't have it. Because monthly hedge pressure resilience alone requires an army of computers just to do this. But those computers, there's a whole array of data that we're pulling. Sorry, array. There's a whole, all that power is used to create those monthly hedge pressures that quick out the door. You have to calculate them within a certain amount of time for them to be feasible. So to just be able to calculate that much data, all we do is remember all the liquidity maps come in the first minute or so. So for us to get an accurate monthly hedge pressure resilience, which means we'd have to calculate all those monthly hedge pressures in the first minute or two, would require just a step up. Now, eventually one day we will have, like the 10,000 member mark, we'll probably jump into that and upgrade those things to get more power, but S&P is good enough by itself. Ever thought about deeper integration with TradingView on the platform? What do you mean by deeper integration? The answer is probably not. TradingView is something we're actually going to eventually get away from as we make our own stuff. TradingView is just a stopgap to get us closer to our goals. Down the road, there's I'll just tell you in 2 or 3 years, you won't see anything TradingView on our platform, with the exception of maybe the charts, but chances are those are going to go away too. We're going to build all of our own stuff from scratch. So but if you're talking, like, what features are you talking about from TradingView that would be deeper integration? See if I can answer your question, Udry. What are alternatives to trading SPY options that people like? Is there MES? But honestly, if you want my opinion, this is just my opinion. Day trading options there's pros and cons to day trading options. I'll tell you what they are. When you trade a futures contract, it's straight up, straight down. You make or lose something. Hold on, be right back. I have to go answer the door real quick. Hold on. All right, everybody. I'm going to go ahead and call it a day. Let's head over to the Discord, everybody, and we'll catch up with you later. Obviously, no trade today. I'm looking for exactly this move I set up here, and then we're going to call it. And then we'll take a look at what happens. But see you guys later. We'll do a little Discord call in about an hour and a half, and then we'll go through and talk about today's trade setups. Okay. Love you guys. We'll see you later. Make sure you check out Rocket Seeders. We're launching futures any day now. Ready to go with that Pro Plus package. If you get in on that, you'll be able to upgrade for a very good price. We have $35 a month to try out the platform before you take the commitment. So we'd love to have you join our community, and we will talk to you guys later. Discord link is below in the description, so we'll talk to you guys later. Head on over there, and we'll have a Zoom call and continue this discussion at noon o'clock. Okay.